Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me this afternoon, we have Mark Marex, Senior Index Specialist with Nasdaq Index Research, to discuss NQDRIS. That's a mouthful, but it means Nasdaq U.S. Rising Dividend Achievers Index. It's great to have you with us, Mark. Welcome back to Trade Talks.
Thanks, Jill. Great to be back.
All right, and let's take a look at your first slide here. Let's talk about 2021 performance and what this index is all about.
Yeah, so just high level to give people an idea of how we construct this index here at NASDAQ. It's the top 50 ranked securities in the U.S. based on trailing 12-month dividend growth being, higher than what you had in the 12 months if you set the clock back 3 years and 5 years. There's additional conditions that we put around, cash to debt ratios have to be greater than 50%. The payout ratios for the dividends can't exceed 65%. And then you've also got to have better earnings, right? More positive earnings in the most recent year relative to 3 years prior. So it's a combination index of, dividend growth that's sustainable, that's rising over a 3 and 5 year time horizon with, a bunch of other financial conditions put in there. So the result is when you look at performance, in a year like this, where we're about 4.5 months in, we're up about 21% on this index year to date. That's handily outperforming both the S&P 500, the SPX, as well as the Nasdaq 100, the NDX, there in blue. And then the last index I've added there for comparison, that's SPD AUD. That's the S&P Dividend Aristocrats Index. Also seeing some nice outperformance there, even though it's a similar sounding index. From a high level, there are some of these methodological differences that we believe are driving the outperformance this year.
And of course, 2020 was an anomaly. How did it perform in that year?
Yeah, so, we got to look back before 2021 and see just the massive difference in performance. Basically, the entire chart is flipped, right? You've got the Nasdaq 100 outperforming last year. You've got the two dividend indexes being the lowest performers here in terms of Nasdaq and S&P. Last year was unique, right? Because when we had the pandemic hit in March, there was so much uncertainty that a lot of the companies that were big dividend payers that had these impressive track records for a long time of sustainable and growing dividends, they suspended their dividend policies. They either skipped payments or outright suspended or in some cases materially reduced because it didn't look like they would have the earnings power to pay out those dividends later in the year. Of course, a lot of that damage was done when it looked like the world was ending in March and April of last year. Things, quickly turned around by like May and June once we got into the summer. And you can see really that this has been a longer term recovery for this part of the market. The high dividend payers are really getting recognized this year as playing a lot of that catch up for the pain that they took last year.
And let's talk about the composition of the index.
Yeah, so from a sector perspective, really interesting mix of sectors here. You can see that financials is the biggest at just over 30%. Then you've got industrials at 20%. Tech still hanging on as a pretty big allocation. But the big thing to take away here, this is an equal weighted index, by the way. So, you've got, about 15 positions in financials and about 10 in industrials. It's really a combination, value, reflation trade, as well as an income story when you look at the sectors under the hood. And then when you look on the right-hand side in terms of the market cap bucketing, you can see, the 10 to 50 billion bucket of 38% of the index weight is just as big as the $100 billion bucket at 38%. So you've got a lot more companies contributing that are sort of in that mid cap or smaller large cap space in terms of the index weight versus a broader benchmark like Nasdaq 100 or like the S&P 500.
And to wrap up here, Mark, is there an ETF that tracks this index specifically?
Yeah, so First Trust has an ETF tracking this index. It's the First Trust Nasdaq Dividend Achievers ETF. And ticker is RDVY. What I'm showing here is about a 3-year trend in AUM for that product. You can see, pretty gradual upslope over the first couple years in this chart, then a quick dip last year during the pandemic when it first came up. And then really around October, November of last year, what I'm showing here is the 6-month change in AUM. So assets have, more than doubled, getting close to tripling now, up over, 4 billion, getting close to 4.5 billion. Just really, really nice growth. Again, I think as that reflation trade really got underway late last year, when the vaccines started coming out, people started realizing, all these sectors that tend to be good sources of income, your older sectors like financials, industrials, even things like utilities, they were going to start to be a lot more attractive in terms of, a total return that they offer investors because of that dividend that was no longer, really at risk from getting suspended or getting cut due to, some underlying uncertainty.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.